Again, welcome to Megatrade101.com's series of video presentations on the foreign exchange market. Today, we have some similar charts from our previous presentations, but made a few add-ons to our technical analysis just to be able to make a point across so you would be able to see and identify the correlations between the different currencies that we're trading. Let's start off with the dollar Swiss, and currently working at the price level of 1.0617 from a low of 1.0496, which is obviously on an uptrend. And even if we do see that there is a crossbar, it basically means that it's just a pause, made a slight correction down, and it's on its way higher. However, some technicians would notice that this may be a double top formation that would give a downward correction somewhere around here, and then on the next leg it would move higher. But we don't know whether the volumes and open interest would still be in favor of the dollar, because the dollar Swiss is basically the replica of the US dollar index, which is on the high side, with the dollar index penetrating its 78.80 level, which used to be the resistance price, with a high at 79.45, would be indicating that the trend for the dollar had indeed made a reversal. You could see that the dollar Swiss is on a 4-hourly time frame together with the Australian dollar, as we would show you exactly the mirror image of the dollar, which is in this presentation the dollar Swiss, comparing it relatively with the Australian dollar. But on a 4-hour chart basis, you will not be able to see the difference unless we would be able to show and change both of them into a daily. Let's start off with the dollar Swiss, as you can see, and the Australian dollar also on a daily level. You could see the contrary directional movement moving higher, and for the Australian dollar to move lower. This way we will be able to identify the contrary positions of both currencies in these levels. We'll pause for a while so you would be able to see exactly and identify it, that the prices do have a correlation with each other. As you could see now that the prices on the dollar Swiss is working still on the high side, and this indicates that there is a buildup on momentum for the dollar to continue to move higher. And comparing it with the Australian dollar, working at 0.8770, is still heading lower. And you could always see the color here that we have used a triangular formation shaded for a support that would have indicated breaking a support level, that it would have to move lower on the downside, and we will show you that at this point in time. But however, we would like to indicate that such movement on the dollar is still to move higher. We have used the 4-hourly charts to be able to provide us with an entry and exit strategy. However, the analysis of the market would be dependent on the overall view, not only on the 4-hourly charts, but also including the daily, which is showed here. And now we would like to show you the weekly, and the reason why this triangular formation became the resistance shade where it is actually the low here of 1.0125 is basically resting on the support, which used to be a resistance, and the apex of the triangular formation would not have been filled up and continued to move higher since the resistance shade had already been broken. Comparing it with the Australian dollar, also on a weekly basis, already indicated that it did broke its support level, especially at the price level below 89.80. That was the first signal, and the confirmation was made when it made and broke the price level of 0.8719 as indicated here. Now comparing it and converting this to a monthly chart would already show you that the triangular formation has been broken and it's towards on the high side, making it a W formation. So the initial target would be, of course, would be quite some time to achieve it, would be at 1.1707 on the trend line that is actually targeting. But that's a long ways to go. How far it would take? As you would notice here, the red lines are cyclical lines wherein we would be able to determine when would that cross be attained at that particular point in time, unless we do this, and it would show that on the month of May 2010 it may be able to attain such price levels. But however, that is dependent upon the volumes in open interest, whether the steep angle to move higher for the dollar would be sustained. So it will take some time before that happens. Comparing it now with the Australian dollar on a monthly basis, this indication now would already show that the spike formation plus the candlestick where it shows a hammer with a down movement already signaled a down trend is in the making. Okay, let's try to superimpose and see that the trend here had already a signal to move lower, which actually confirmed this line is actually a projected line in parallel with the previous resistance trend line, which is located here. So at this point in time, the probability is moving back to the 0.85 level, okay, which is actually only on the 38.2% retracement on the Fibonacci levels. But again, I would like to superimpose this on a weekly basis so you would be able to see the comparison that once the resistance level here on the triangular formation had been broken and formed a W formation, the trend is actually on the high side. And it also shows the same thing on an opposite trend heading lower, which is currently in the making right now. The current price for the Australian dollar is currently working at 0.8771 and simply reflects that the prices would have to go to 0.8590 in some point in time in the next couple of months. However, it really depends on the movement and the strength of the dollar, whether it's going to continue higher with enough volumes and momentum that can achieve this movement. We will be making our second presentations However, at this point in time, we would like to go back to the original and leave you be with this scenario, and we'll continue with the next presentation. Thank you very much and have a good day.